A great originator can see farther down the road in this mortgage process and can see mistakes or that's not going to work. Like, that's what makes a great originator. When you can look down the path and go, if you go left, we're going to have a roadblock. But if I go right, I know right doesn't look right today, but if we go right, this thing is clear to close and it's clear sailing and you're going to love your experience. The other thing that originator needs to work on in 26, which I think is a big topic, I'm sure you're coaching on it, is creating this calendar. And
how about just use your calendar? Can we start there?
All right,
use your freaking calendar.
Make it so you could use it. Like, who's the best coach? The one you'll listen to and you'll be coachable. Yeah. And then which is the best calendar? The one that you'll actually use. But like, I'm seeing efficiencies across with LOs that are actually spending the time to be able to like to me, I just follow the calendar.
Yeah.
Shut up, follow the calendar, do my work, and the rest will naturally happen. But if you can do that, no telling what you can get done.
The first thing I do, so I had this boot camp that I do, and I graduated 100 students from it a year.
Cool.
And I'm thinking about rolling it out to like some of the major lenders throughout the country.
Yeah.
The first thing they have to do is track their time for 30 days. And by the way, 30-minute increments from when you woke up to when you went to bed. And I go, it doesn't matter what you're doing. I go, it matters you know what you're doing.
Yeah.
Then we can go study it and look for some inefficiencies, make some changes. The second thing I make them do is show me your calendar. Show me your calendar. I will tell you how successful you're going to be. Show me no calendar. I will guarantee you no success.
Right.
So you show me a person that has a calendar that they use and they live by, more than likely you have someone who's above average to all the way to being a top 1%er. How about this one? What concerns you? Like, you're leading a company.
Yeah.
Right? I mean, your company has retail and you have wholesale. So you have your retail lenders and you have all the brokers that are your clients over at Windsor. You have a lot of responsibilities, right? When you're looking out, what's concerning you?
Well, it's a big one. And I don't think we give them credit, and we should. The servicers are getting better, and they're going to be working your portfolio more than they ever have going forward. And there's the recapture. I mean, the best in the market's Rocket. They're the best at recapture, right? So if they're the best at capture and you're looking at these other companies who are servicing, if you're not on it, you're going to lose. And that's why we're making this big push towards portfolio.
Yeah.
Like,
I love that word. There it is again. Second time used.
Yeah.
Portfolio.
So I'm telling you, the services are coming for yours and you better get in front of it.
Yeah. Looking back at your career, what's one or two things that you did that you're like, damn, I'm so happy I did that because I'm where I am today because of it? And then I'm going to ask you the reverse, which is what's one or two things that you did you're like, damn it, why'd I do that? I will never do that again.
I'll give you one that you could steal.
Okay.
Which is, I started to, when I wanted to be number one in this coaching group, which was a stupid goal, right? And today, looking back, kind of stupid. At the time, I was just like, I'm going to get it. And the only way I could get it being in South Dakota is I got to make a bigger net.
Okay.
So like thinking outside of the box, one. Two is that what could you do to be able to generate more leads that you could actually convert that wouldn't cost money? And
these are two things that you did early on in your career that you're grateful you did.
I'm grateful.
Yeah.
And so I started to work community banks. I created a program for community banks, and 6 months in, I was at 80 to 100 loans a month by working my realtors, my portfolio, and community banks. And
you were personally funding
it.
You were personally funding. Yeah, because these community banks, and by the way, credit unions as well.
Yeah.
Right. Credit unions are great referral sources that loan officers don't target enough, but it's like they might not even do FHA or VA.
It's so much. If you literally follow this script by calling and saying, "Can I speak to your mortgage manager?" And they go, "We don't have a mortgage manager." Great. Can I talk to the market president? So now you already know they don't have a mortgage department, right? When they say they don't have a mortgage manager. Number two is they're like, "Yeah, that's Bob." All right, cool. So now I'm like, "Bob, hey, what do you guys do with your turn downs and the government loans?" I see, and you can all look up online, it's all public, the call report for any community bank. You can look at their fee income and you can look at their mortgage secondary market fee income. So you can tell right away if they're doing anything or not. And then you're going to have to go in and create a little educational seminar for his staff for them to refer you the non-QM, and the government loans because they're not specialists at it, and they hate to tell their customer no. So this is an easier way to say, call Chris.